If you want to watch me expose a trader for the fraud that he is, stay tuned. If not, hit the road. My name's Pat Mitchell. I have been a professional day trader for the past 11 years, and that's what we're going to be doing today. I'm going to be exposing a trader for the fraud that he is based off of his trade entries, and you're going to see exactly what I'm talking about as we get in. So please keep in mind, we are looking at these trade entries from a professional standpoint, a professional trader standpoint, where there is no in between. There is always and only a certain way of doing things. And please keep in mind as well, it has nothing to do with people's individual strategies. There are certain key fundamental rules that day traders, professional day traders, have to follow in order to be a successful, consistent, long-term consistent day trader. So without any further ado, let's get right into this and let's do a deep dive. One sec, folks. Let me grab my charts and let's rock and roll, man. Hopefully you guys are doing well here today. Okay, so now that we are in the charts and the screens are up, we're going to be discussing a trade. Now, I'm going to leave the guy's name out of it for now because it's not about that. I'm doing this for two reasons. The first reason, for obvious reasons, is to expose a trader for running a service and based off of his entries, and because there are so many fundamental mistakes and just like flaws in not only his entries but his exits that are very amateur mistakes, that right there alone, there's no way he's a consistent and profitable trader for the 8+ years he's been doing this. So he's been doing this almost as long as me, if not as long, and he runs a service, and based off of these entries, you'll see by the end of this, there is no way. I will change your mind. If you're looking at this and thinking, oh, well, that looks good, you'll see where the mistakes are. Number two, the second reason why I'm doing this, you might be a trader that is struggling. You may be making the exact same mistakes. Actually, most likely without coaching, you probably are making the exact same mistakes. And I'm going to point these mistakes out and hopefully give you light bulb moments along the way to help you change your trading. So let's start diving into this and let's take a look. I'm going to explain the chart so then we're all on the same page. So on the left-hand side in blue is the daily chart. Right in the middle, this black chart is the 1 minute chart, which is what he has his entries based off of. And then on the right hand side, this is his trade entry chart from his Instagram. So this is one of his posts. He doesn't post his entries very often. And that, which tells me, because he doesn't post them very often, you can tell he's very proud of this trade and thinks it's a very good trade that would only help promote his business, which is not the case. It actually does a lot more harm than good. Now, it might do all right because it is a trade that is obviously worked. He has shorted Hood on Friday. So please keep in mind as well, we're not looking at yesterday's or this day's candle action. We're looking at this day, right where my cursor is, okay, on this daily chart. So that's what we have to go off of. That's what he is trading off of. So also red entry candles here, trade entries, triangles, sorry. He's shorting. So when he enters, when you short, you sell. That's why they're red. The green are where he's paying himself and pulling profit. They're green because in a short, you need to buy back what you sold. Okay, so that's how that works in case there's any confusion. So let's start going over his trade and let's start laying out his entries. So I'm going to do his entries in white and his sells in blue, just to keep it all on the same page. And where I am going to be placing these entries and exits, you have to go off of the tip of these triangles. Okay, so that's important because that's the exact entry. So I'm going to keep this as perfect as possible. So his first entry was just below this candle right here. So that is entry number 1. And I'm going to label that number 1. So entry number 2 is after this green candle. It's on the way back up. he goes right here. Now, those are his 2 entries. So that's entry 1, entry 2. Now let's lay out his exits, and let's do them in blue. So first exit is right here. Second exit is way down here. Exit number 2. Exit number 3. And exit number 4 right there. So I'm going to label these 1, 2, 3, and 4, just so I can talk about them in number as I'm going. So again, there are a lot of mistakes in this. Okay, so please pay attention, and you're definitely going to learn something here. So now I want to change the color. So for my drawing, now let's get into this, folks. Okay, so let's talk about his entry. What has he done here? So remember, the tip of that entry is right there. Morning lows is right there. What he has done is he has done the basic retail day trader shorting the breakdown on the opening range. It is an opening range breakdown short. Now, some of you may be thinking, oh, well, that's good. That's normal. No. There is a high percentage. So this is mistake number 1. Mistake number 1 is shorting the breakdown. Professional traders never short breakdowns. They short pushes into technical resistance. Okay, and there's a reason for that. You want a test of that resistance, because right at those levels, okay, where we have technical levels, that's where volume is going to be. If you have a resistance level, there is going to be people pulling profits as well as other shorts shorting that, at professional shorts shorting that. And you want to follow professionals. Professionals are the ones with the larger accounts. They're the ones trading by the rules. This is how strategy works. You need to base strategy around professional trading. When you short breakdowns, you're basically chasing, and you're not thinking about risk, which we're going to talk about in detail here, because it's a big, big mistake that he's made on entry number 2. And it's now, I forget the exact percentage of breakdowns and breakouts that fail, but it's roughly 86% of breakdowns and breakouts fail. So what he's doing is he's shorting the breakdown. That's, like I said, mistake number 1. Now, again, some of you that are inexperienced might be going, well, that's a viable strategy. Number 1, it isn't. But what I'm about to show you here in about 2 seconds is going to absolutely prove what he's doing is not good. So he classifies himself as a technical trader. As a technical trader, we use technicals, right? We go off of daily chart as well as technicals off of the 1-minute chart. So what we have here is a range on the daily chart from highs, sells off, puts in a base, bounces, pulls back. Remember, his first entry and this trade is based off of this day. It has not failed this support level yet. So let's snap a level here and show you, and show you exactly where he decided to go short. Right there. Let's talk about this. So what we have here is his entry here with an extremely valid support level right there. This, now you may be looking at it and say, well, it worked though. Yeah, but when you're trading strategy, this is one thing where a lot of new traders and struggling traders have a hard time with, is understanding that strategy. When you are working a strategy, no matter what strategy it is, you do not go short into support. You go long into support, and if that fails, there is a workaround and a management strategy for that. And I'll explain that towards the end, and I'll show you exactly how this chart should have been worked. So if you're looking, he goes short right there, right into that support area, guys. There is 20 cents. That's absolutely a recipe for disaster. The odds dictate in with technicals that this support area or level will bounce. This is an extremely valid support level, guys. This is a range where you need to take a look at volume. So let's look at the volume on these 4 days at lows. And that's going to be in this area. You can see there's heavy volume there. Volume equals support. That's why technical support and resistance works. So just because it didn't bounce doesn't mean that on a high percentage of times it will bounce. The people that are in long on this part of the daily chart will generally protect this level. There just happen to be more sell pressure than buy pressure, and that's it. Now, I don't want to hear about watching level 2 and all that shit. That is all lagging. Those are lagging indicators. And they're lagging indicators that in time is very difficult to provide consistent results through doing that. Okay. So again, all of that volume, generally speaking, 9 times out of 10, you're going to get a bounce there because these people over here are protecting that position that they went long into. It's a problem. Going short into support is a huge mistake. That's something that my traders would do at like the first month of them joining. And I would immediately change their mind on that, because there's so many times where just because it races into that level, that's what you want. Professionals execute into levels. And if it fails, then you have a workaround for it. It's how it is. That's how strategy needs to work. So that's a big mistake. So that's entry number 1, which is a huge miss. Missing this level on the daily chart, it tells me a lot. And going short into support tells me even more. That's horrible. It's something that there is absolutely no way in time you can be a consistently profitable trader. So let me clean this up a bit. Okay, let's go over entry number 2, because this is ridiculous as well. So when you're looking for an ad, you're looking to increase your average. Okay, what he's done here is basically just entered willy-nilly. So when you have your first entry here, second entry here, your average is here. Okay, I'm sure you all would agree with that. Now, I don't know how many shares he's traded on the first and second, but let's say it's split down the middle. 1,000 shares here, 1,000 shares there, 5,000 shares there, 5,000 shares there, whatever it is, it doesn't matter. His average is just below that level, that key level. Now, that's fine, that can be, but on this here, you absolutely, like, to get your average corrected or your average better, you need to wait for proper levels. So what is he going to risk off of? So with his average now being right here, if this decided to come up a little bit and just come back into his entry, he's probably going to freak out because he was just up this much profit and now it's all gone. Now, I know I might be talking what ifs. These aren't general what ifs. These are where the odds are. Generally speaking, when we wash through a support level, a heavy support level, which this is, it will come back up and retest and bump its head or pop through, remount, and push. It happens all the time, guys. I have strategies based on this that work a high percentage of time. So that tells me what he's doing here is he's not being patient, he's not being disciplined, and even more importantly than that, he's not thinking about risk. So I'm going to clean this up real quick, and we're going to talk about not thinking about risk. So what do you risk off of now? In order to get a secondary entry, This needs to come up to a reasonable area to risk off of high of day. Now, I'm not saying you always need to risk off of high of day. That's not what I'm saying, but there's literally nothing else you could risk off of. And for those that might be saying, well, you could risk off of that valid level you're talking about. Yeah, but then you're stopping out right before the intraday level of resistance. Like, you're stopping out for the sake of stopping out. It's not worth a secondary entry, or it's not even worth taking the trade. Again, I know some of this, it can be hard to see when you're an inexperienced trader. And again, that's no shade on you guys for being inexperienced. Everyone's inexperienced when they start. But we need to understand that you can't discount experience. I've talked about this a lot. I've been doing this for 11 years with wild success and consistency that you don't see anywhere else. And this is why I want you guys to listen, because there is a certain way that all of this needs to be done. And we'll get back to the trade here in a second. Now, I know I've said this to death on this channel. I've beat this dead horse, but we've all heard 90% fail, 10% make it, right? That's, people regurgitate that left, right, and center. Now, whether some people write in the comment section, oh, it's 5%. I don't care what it is. That first percentage doesn't even mean anything. That 10% make it, they don't make it long term. That 10% is to gain consistency, a base layer level of consistency. Now, to have long-term consistency, to make it to 5 years, out of that 10%, 1% makes it to 5 years consistently. Not bullshit, not up and down roller coaster P&L bullshit. I mean true professional level consistency, okay? 5 years, out of that 10%, 1% make it. Do you have any idea how many of that 1% make it to 10 years? 0.1% of that 1%. Think about that. So I've been day trading for 11 years. I am that 0.1%. So if I'm telling you this is what you like, do not do this in order to make it to 10 years, you got to take my word for it, guys. Because what I've seen on Instagram, YouTube, and on X is nothing but entries like this. They're dog shit, they're garbage. You will not make it long term. You can't. This is just his entries. The amount of fundamental and technical errors and flaws that are in this is jaw-dropping. Not to mention his exits. And those exits, it's going to blow you away. And those exits, what I talk about with those exits, definitely going to help you with your trading, because I guarantee you're making the same mistake. So to get back into the trade here, not thinking about risk, this is all we can control as day traders, guys. The only thing that we can control is risk. Nothing else. Nothing else. We watch the market and we're along for the ride, okay? We can't control anything with the market. It's very easy to look at this in hindsight and say, well, it worked. I've had people make comments like that on videos similar to this that I've made through the years, but it worked. Yeah, but how do you know it's going to work when you're entering? You're talking crystal ball shit. You don't know it's going to work. I don't want to hear that. Oh, I knew it was going to work. Bullshit. You don't know. You absolutely don't fucking know. It's impossible. That's like literally having some Black Mirror or crystal ball. It's bullshit. And I'm not saying that you can't have a bad day as a trader and then have me just like fucking like hammer you down with your entries. Absolutely not. But what I'm seeing here are fundamental mistakes, and there's a lot of emotion. If you've been a trader for 8 years plus and you still haven't gotten your emotions under control, that tells me right there all I need to know. Not to mention not thinking about risk, not spotting major support and going short into support, shorting breakdowns. That's amateur hour shit. That's dumb money tactics that you will never make a dime. That's why the smart money goes after retail traders, because they fucking trade like this. And if you trade like this, you will not make money consistently long term. You won't. It's impossible. So now let's talk about exit number one. Now, exit number one, I don't really have any problems with. Okay. Now, going through this daily chart, seeing like why he's paying himself here, one could make the argument he's paying himself right here. Okay. Into support on the daily chart. But I don't believe so. I think first impressions, it's like, oh, because that's what I thought when I first went over this chart. I go, oh, well, at least he did something right. He paid himself into that support. Yeah, but if he missed this support, right? So if he missed this support and he's going short into this support and not thinking about risk or anything on that, but more importantly, this, well, he's not looking at this. He's not looking at the fucking daily chart at all. So he's not trading to targets. Now, again, I could be wrong about this. I will admit that. I could be wrong, but I don't think so. I think if you're missing going short into support off of a crazy solid level, off of the daily chart, you're probably missing this too. I'm pretty sure you guys would agree. So again, it's an exit. I mean, it's fine. He paid himself on a push down. I guess it's fine, right? No, I don't really have any problems with that. So we can kind of keep moving on. Now let's talk about exits number 2 and 3. What you guys need to see right here is how he exited on the way up. Okay. So let's talk about that. Well, basically, what a professional trader executes, so enters and exits into levels. So let's find out what was here. Let's zoom in on the daily chart, guys. Okay, let me clean up this chart again. And let's zoom in on the daily. Oh, I got that magnet on. I got to turn that off. There we go. So we have the 200 SMA on the daily right there. But he's not exiting into that 200, is he? It's a technical level, and it's a valid technical level. You can see here it bounced off that yesterday, right? So he's not exiting into that level. He's exiting because this candle went green. Let me explain. So ever since we were kids, it's like it's ingrained in us, especially in our day-to-day lives, that green good, red bad, right? Red means stop. Red is a stop sign. Red is the stop signal at a traffic light. Red generally means bad. Green means good. Green means go. It's green on your P&L. Green candles go up. It's everywhere, guys. It's a reason why this is designed the way it is, with down candles being red and green candles going up. It's part of the manipulation tactics that they use. Now, obviously, you can change the color of your candles, but ultimately, that's why it's green and red, guys. So on this here, when you're exiting right here, you're not exiting coming down into this 200 SMA, a valid technical support area. He's waiting for it to push up. Now, this is where the emotion comes in and why he's doing what he's doing. So if you're exiting on that green candle up, what he's doing is he's telling himself, oh shit, I better get out or I'm going to miss it and it's going to bounce. He's basing a decision, an entry in or an exit, based off of emotion. That right there, just by itself, guys, if you've been trading for 8 years and you're creeping in on that 0.1% status, there's no fucking way. You never base entries or exits off of emotion. You can't. Now, I'm not saying that there can't be emotional exits and entries. It happens. I do it from time to time. It happens. But for those of you that watch my channel, or if you don't, go into the live section up in the header, and that's where I post all of my personal trade analysis. Every single day I post my trade entries. I go over my trade plans for the day, the whole nine. When you look at my trade entries, you'll never see that. You'll rarely see that emotional exit or entry. And if it was, I'll mention it and I'll say, well, kind of on further assessment, I kind of realized maybe this was a little bit emotional. But when you have a target of that 200, there should be no emotions whatsoever. You should be exiting coming down into that. And he didn't. He waited for it to bounce already. It's already bouncing. And then he's telling himself, oh shit, I better pay myself. Professionals don't do that, guys. I know some of this stuff, it may seem that I'm like being nitpicky or like this is speculation. It isn't. There's nothing opinion about this. This isn't speculation. This is a major problem with what I'm seeing here. And this is what I've always talked about. I can always look at a trader's entries and exits, one entry chart, and tell you whether or not they're full of shit or not. And I'll do it like that. And I did this. Obviously, this is a long-winded video. But as soon as I saw this posted, I looked at my daily chart because it was up. I'm like, oh no, he fucked all this up. And this is the one he's proud of. This exit number 3 is after it's starting to bounce back up, okay, on this. So it comes down, he's seeing it's not breaking down anymore. He exits, and then finally he exits out of the rest. And that's it. So let's do a real quick recap of the issues here. Number 1, shorting a breakdown. You don't short a breakdown. You short into resistance because that is going to give you the least risk and the best price on that. Because if it does want to break that resistance level, it's not going to be by much. This here, entering here, you got to give it risk here instead of entering here based off of technicals. Let's say pre-market support. There's other technicals that I found. There's lots there. You can go short into that resistance. But I wouldn't do that because I have support here. I need to see support break. So going short into support, missing the daily chart, massive, very important range here. That's a big problem. Number 2, not looking at risk for a secondary entry and not thinking about your average. Number 1, down here for exit, I don't overly see a problem with it. But on exits 2 and 3, we have a major emotional issue, and he's not trading into targets. Professionals will always trade to targets. Always, always, always. You'll see that on my trade entries charts, on every single trade entry chart. I'll pay myself on the first push, but then I'm trading to targets. Also, there's one more thing here. Where you entered all of this way, right? You got to lock something in, even if it's a little bit here, because it's so easy for it to bounce and turn red. And that's telling me if he trades like this all the time, he probably has a lot of trades that go against him and ultimately red. He's more red than he is green. That's for sure. So that kind of wraps up the trade. So now I'm going to show you guys how a professional would take this trade. Okay. And I'm going to give it to you absolutely straight, how I would trade this and how any professional would trade this. And by the way, you could take this to any legitimate professional, not someone that you think is professional, some fucking hack out there. You could give it to a legitimate professional trader, a day trader that is like fucking bona fide, man. And they'll say the exact same things I'm saying. 100%. And if your service owner, your day trader, your coach, whatever the fuck he is, if he's doing this, I'm not telling you need to join my service at all. I don't care. If you do, you do. If you don't, all good, man. Keep watching my free stuff. All good. That's why it's here. But if yours is, get out right now. Get out immediately. Cancel today and get the fuck out. If you don't, you will absolutely fail. I don't care if you're making money right now. I don't give a shit. If you were making money, you wouldn't be watching my channel, guys. Okay? It's a problem. Get the fuck out. So now let's go over how I would trade this. Okay, we have a major support area right here. We open up, we push. As we start coming back down, I will enter going long, yes, long, into this level. Now, it didn't bounce, and I have a management tactic for this. When it slices through these levels, on those washes, I will add into the wash because like 96% of the time, it will come back up and retest that level. So enter into the wash, get out on the retracement. I would have already paid myself here. Now, I'm not saying I would be green on the trade. Don't really care. But it would be about scratch. So $0. All good. But that's how you have to trade strategy. So then what I'm waiting for is I would have waited for a retest of this level here. Now, it didn't do that, but it did do it later. There is a technical level support here. We could go long into that support. Would have worked great. But let's say I really wanted the short. That's what I'm trying to show you. So since we have a valid, extra valid support, previous support, it will now test as resistance, which is what it's done. So on the way back up, I will enter. Remember, this is within about 20 cents. So that's well within risk tolerance. There's nothing wrong with that. I would have started in. Once it pulls, I pay myself. It comes back up. I enter. And then I pay myself into that support, into this support, and then into the 200, and I would be out. This would be my target. As it's coming down into that, I'm always paying myself. So if that went a little bit fast for you, rewatch it. But that's exactly how it needs to be done. As a professional, I think the one thing that I really want to go over is that first going long, because you might be looking at it and saying, well, it failed. Well, again, guys, stop looking at shit in fucking hindsight. We don't know that. We don't know what's going to fail. We have a valid support level. You have to go long into support. Once it fails that support, then you can look for a resistance or short trade. It is an if-then fucking scenario. Strategy needs to be traded every time there is a trigger. If you're going long, you have to go long into that support level if it meets your criteria for your strategy. If it doesn't, don't take the trade. But you can't be going short because you think it's going to fucking fail. Oh, you think? Right? Like, fuck, what do you do? You're some sort of fucking magician, some sort of mind reader. You're going to read the fucking market's mind? You fucking genius. Like, you got to stop doing this stupid shit and stop lying to yourselves. I see traders do this shit all the time. There'll probably be a fucking half dozen comments in the comment section telling me how I'm wrong. Yet those people haven't made a fucking dime in the market. Yet I'm sitting here living in fucking literal paradise. Like, come on, man. Let's get our heads out of our ass. And if you are trading like this, right? Like you're making these fundamental mistakes, this video is for you. Okay? Change it. If you don't know how to change it, come get fucking coaching. Okay? And if your trader that you follow or you pay for his service and he's trading it like this, get the fuck out, guys. Get out. It's got nothing to do with his strategy. Well, this is my strategy. He doesn't know what I'm doing. Yes, I do know what you're doing. You're not doing anything fucking special here. You're trading a basic bitch retail trader setup, an opening range breakdown, for fuck's sakes. That is the most basic of basic bullshit. It won't work long term. It doesn't. In fact, on the long and opening range breakout, I was part of one service. I was in there for 1 week because I knew it was a setup. That setup, this is a setup. It's not strategy, by the way. So this setup will not work consistently over time. That's why I left. I knew that this shit wouldn't work in my first year of trading. I joined one service. I lasted a fucking week and I was like, I'm getting the fuck out of here. Now, remember, 11 years ago, there wasn't an abundance of coaches out there, which probably a good thing. I ended up doing it on my own and going through and struggling like a motherfucker to get there. But there wasn't anything out there. If there was somebody that could have shown me how to do this, I would have fucking gladly given them my money. Would have saved me a lot of fucking time. So if you want to learn to be a consistent, profitable, professional trader, come to tricktrades.com. If not, no problem, guys. No pressure, man. It's all good. But continue to watch my free YouTube here. And but you have to like and you have to subscribe. Have to. It's not a take scenario. This is a two-way street. I give and you got to give. I think that's only fair. Okay, guys, I hope you learned something. Adios.